Welcome back to Business Tonight. Okay, let's go to our big story this evening. Reserve Bank of India releasing a draft paper on new bank licenses. Big groups such as the Tatas, Mahindras, Larsen & Toubro, India Bulls may not qualify for a banking license since all of them have exposure to real estate. To discuss all this, we're joined by Ashwin Parekh, partner and national leader at Ernst & Young, Shachindra Nath, COO, Religare Enterprises, and Uday Patke, President of Finance and Legal Affairs at Mahindra & Mahindra. Ashwin, I wanted to start with you. One, is this a good idea? And two, I wanted to look back to what's happening in South Korea, given the government there did allow big chaebols into the banking industry. That really not a very smooth affair, and of course a conflict of interest. Could this perhaps happen here in India?
Well, to begin with, I mean, let's look at the idea first of all. I think it looks like a very, very pleasant deviation from the earlier thinking on the regulator's part. The factors that could have perhaps gone into the mind of the regulator in coming out with a discussion paper like this could be the capital, the amount of capital that is really required to grow the credit. I mean, India has been growing at a good rate, at 8% of GDP growth. So there is a need for larger credit to be provided to the economy. So that's one. Two is there is a substantial financial inclusion challenge. 69% of the Indian population is still not banked, and therefore there is substantial capital required. So where can this capital come from? You know, that's a question that you keep on asking. If it has to come from professional NBFCs, now there are very few left who have the ability to put in that kind of capital. You certainly can't have the foreign investors bringing in that kind of capital, because then that once again exposes you. We've seen during the last global financial crisis, a lot of foreign banks lost interest in emerging markets. They pulled out of emerging markets. Their home country requirements required them to do that. So this capital had to be brought into the banking system, and to that, I mean, to address that issue, or that factor, this discussion paper really is a very sound way of so it's positive.
Okay, great. I appreciate your view, and I think you've sort of put out the bottom line of this paper. We'll pick up one by one in terms of the draft guidelines. Let's bring Mr. Shachindra Nath in. RBI's minimum capital of 500 crore rupees, something Ashwin also just talked about, that probably could be raised to about 1,000 over 5 years. Seems like a bit too little given what is the norm in most other countries around us.
I think so. What RBI is doing, which is I think so is most appropriate, they are not excluding corporate houses or industrial houses to get banking licenses, as long as they can demonstrate that their providers of capital and the governance of the banking business is two separate things. So they are saying is that if you have a pool of capital which is coming from your industrial sector, you can deploy that capital for banking play. Better if you have some financial services experience, that you are more preferred, but does not mean that you can use the power of your capital to govern how you are going to run that banking. That should be standalone. So the board, the governance, the intercorporate loan, all the related party transaction is very strictly need to be governed. Because you have to understand, banks can create systematic risk to the whole financial market in this country, because you are accepting deposit from large portion of retail and institutional market, and at some point in time, if you run the risk of that money being channelized for benefit of one or two industrial houses, that cannot be accepted neither by regulators, not by anybody in this marketplace.
Right, coming from you, surely one should take it with a pinch of salt, given the kind of norms that have been put out. Ashwin, to come back to you, just a sense that, you know, they are not going to allow most of the corporates, given that clause in there. We'll talk about the clause in just a bit, but really you were raising the question of where will the capital come from? Now, if you just take away most of the large corporates, what are we left with?
No, exactly. I mean, you know, the domestic investments, you know, once you take out large corporates, you know, then there is very little that's really available. You know, you will have to first create a format under which the retail investors can go on to invest. You will need some promoters, you know, to really do that. Now, we've seen that public sector banks, for example, on account of this 51% formula, are not in a position to mobilize much capital in keeping with their requirements. SBI will soon exhaust their 51% in about 3 to 4 years time, that 8% leverage that they have. Where is this capital going to come from? And therefore, there is a realization, there is a recognition in this discussion paper that that capital can come from the corporate office, the corporate houses.
Mr. Bharti, I wanted to bring you into the discussion right now. The Reserve Bank of India saying that industrial houses directly engage or indirectly engage in real estates basically should not be allowed into banking. Doesn't that weaken the case for companies such as India Bulls, the Mahindras, Larsen and Toubro, as well as others?
This is only a discussion paper, and precisely because there are these type of issues which have different points of view, so which is where we'll be putting forth our point of view at the relevant time before the authorities. And the important thing is that, as you rightly said, that the RBI seems to be open to the concept of industrial houses getting into the banking field, so long as the industrial houses satisfy whatever conditions RBI seems appropriate. Now it is really for all of us to think together and put forth various viewpoints so that the RBI takes a considered view on what those conditions should be.
Shachindra, one of the parameters RBI proposes is the WRT promoter holding at 40% of the maximum current promoter holdings for Religare, and is about 57% if the final guidelines do come across with the same sort of stipulation and you opt for a banking license. Would you be looking to bring in the promoter's holding?
The promoter holding is in Religare Enterprises, which is the holding company for all our businesses. Religare Enterprises on its own does not operate any business. It's the holding company for all our subsidiaries, which are independent subsidiaries. And so from that perspective, we have yet to take, we have to see our final policy guidelines, how it evolves, and whether we can achieve all the objective which policy makers are expecting new banking license holders to achieve, which is large financial inclusion, governance. So we believe that most of those places we would fit in the criteria, and we don't think so that we intend, our Religare Enterprise is in a hold co. So the bank, whenever we do, we'll try to make it as a standalone business, which would be probably where Religare Enterprise will hold our holding. But if there is no intent to convert our current Religare Enterprise into a banking business per se. Our current company is just an investment company.
Ashwin, just to get a sense from you, now that we are going to see these as draft guidelines for some time, they're expecting some feedback on this. What do you think is sort of eventually going to make as some of those stories that have been put in here will be made into a real rule besides the draft? What could be the more potential real guidelines?
Well, let's look at the process first of all. What will happen now is that people will offer their comments. Now the very issues that we talked about in terms of, somewhere the discussion paper talks about the industrial house having a prominent presence in financial services, for example. What is prominent? Exposure to real estate. What is the extent of that exposure that would be permissible or acceptable to the regulator? So a lot of detail or lot of questions and observations and views will come out, after which proposed draft guidelines will be framed at the regulator's office. I'm seeing that this process might take between 2 and 3 months, and then we may once again see another discussion paper or a draft discussion policy document coming out for final review from the regulator's office. So I would say a lot of the observations made in the discussion paper today may get rationalized or may get well articulated, and then more numbers will start coming in from the viewpoints from the regulator's office as well, I thought.
This business about exposure to real estate, we were talking earlier, Mahindras have a small real estate business. Enough of an incentive for the Mahindras, for instance, to ditch their real estate business, says, okay, let's get a banking license.
No, see, each industrial house, who's looking at banking business very seriously, will certainly consider that. They'll certainly look at the options which are available. There's one more thing that is likely to happen, and that may influence the structural aspect of the application. There's going to be another discussion paper on the holding company structure that the Reserve Bank internal team is going to come out with. They're working on this at this point right. In time. It's applicable to financial conglomerates. It's going to be equally applicable to corporates if their applications are received well by the regulator's office. office. Once that comes out, then the structure and how well do you contain that risk? You know, if there is a risk on account of the exposure to real estate, either through the structure, you know, or through hiving off that business, you know, how well are you addressing that exposure or that risk is something that the regulator, I'm sure, will look at.
Ashwin, great to have you on the show. Thank you so much for joining us. Gentlemen, we've run out of time. Ashwin Parekh at Ernst & Young, Shachindra Nath at Religare Enterprises, and Uday Patke at Mahindra & Mahindra. Gentlemen, thank you so much for being on the show. Up ahead.